This trend line, however, seems to be rather compelling. It's one that started in November after gapping higher. The S&P 500 held on to this trend for a good part of 2 months and maintained itself above it thereafter, but kind of left it in the dust. I've been adding this one back into my chart for the last few days because, well, it turned out this was right where the market was struggling on a repeated basis until today. Today puts us decisively back above. Whether we end up going up at this same very steep, most recent slope, or perhaps take a brief breather at these new all-time highs, what you're looking for is at least some sort of a positive slope to start forming. So it's not uncommon for us to see the price come down at least some margin along the way. After all, the price did come down by 6% before bouncing away and coming down and only then really starting its way higher. It's okay if we see the market come down a little before it continues higher. That is all right. And frankly, that's what happened in this period in the first place. In a prolonged uptrend, having some measure of a correction, as we might call it, is certainly a worthwhile part of a market movement. When we call it a correction, folks, I want to note that the technical name for a correction is in a bull market when the price drops from peak down to this new low at 10%. We only went a little less than 6% down on the S&P 500, so certainly it was not as dramatic as it could have been. But nonetheless, all-time highs are welcome all the same. As we glance down here at our purple set of lines, I've got from our low all the way up to our high as a way to measure out. Now that at least we seem to have put bearish movement behind us, here is our measurement as far as how far back down we ever came. The worst of it was right down here, just beyond the 23.6 Fibonacci line as an area of reasonable support for us to take a look at. Just below that $5,000 mark, it ended up bottoming out right here at about 49.50 was the lows. Knowing that that's how we got here for the S&P 500, as we have each and every time in the past, now it's time to think about how we are arriving to these all-time highs. What's leading, what's lagging, and where are we looking to go from here? As always, we'll be starting that off with this relative rotation graph. The relative rotation graph. So here we've got this pulled up. We've got this one swinging through real estate up here in the top left. Over to the top right, we've got IXU, utilities, showing up. And then this notably long tail of energy that was up here towards the leading or at least weakening areas, but unfortunately has lost all forms of its positivity. Unfortunately, energy becoming a dramatic laggard. This information comes from the relativerotationgraphs.com website, where you can sign in and grab this for free if you're interested in taking a look at this on a more frequent basis. I do also have pulled up a little key for us so we can see the names of each of those different ones if you need to refer to it. As we do, we've got a few things that we notice. We have 4 different quadrants: our leading, weakening, lagging, and improving. And we see a typical pattern where the market will rotate in this circular behavior, not always making its way into all 4 quadrants, but almost always moving in this same shape. For example, IXR, consumer staples, may find its footing and move right back up here into the leading without ever joining the lagging portion of this graph. But as we think about this relative motion, the key is the further away from this kind of middle point, the more impactful and different we are seeing performance in that given sector at that time. For example, down here, IXT, which is the technology sector, was lagging in a fairly substantial way, but now has mounted a bit of a comeback and is up here towards the top. This chart goes through yesterday's price action, does not include today's price action. So the fact that we are launching higher on technology-driven news means perhaps we're going to see that even greater, maybe pushing into leading if we were to refer back to this tomorrow. IXC, our communication services, is right here. It was weakening, it lagged, and now it's finding its footing, moving back in the right direction. Perhaps that should be no surprise, seeing what it's been doing just recently, not particularly out front, but improving and getting in the right direction as we work through these, as we think about them. The midpoint here would be said to be the comparison of each of these against themselves. Since these all make up the S&P 500, theoretically, if we're looking at the 100 mark right here, the 100 would be the S&P 500. That's a moving target. This is a relative rotation graph. So we're looking for things that are doing better or worse than the S&P 500. As we look here, this one just breaking above improving means that it is going now from a below a negative momentum relative to the S&P 500 to now a positive momentum relative to it. So in other words, it's picking up speed. But this graph left to right is telling us the actual relative values. This is when we're talking about a price comparison. The actual calculations are proprietary to the Relative Rotation Graph Company by JDK, which I won't attempt to pronounce the individual's name, but these are the initials for their name and who developed the format. So if you want more detail on it, head out to relativerotationgraph.com. But that's the key ideas. Utilities still out front, energy far behind, technology, communication services, recovering and moving now into this improving area. Maybe we're going to start to see things change just a little bit. Other notable changes since last week, IXR, the consumer staples, losing quite a bit of steam. Next on our list, we're going to go ahead and glance through a number of our different performance spreadsheets. We're going to start off, I think, with our year-to-date version this time. And take a look, folks, from the end of 2023 through till this morning. I pulled this just a few minutes ago. And here we've got our price performance year to date, which we have found ourselves back above 10% positive for the S&P 500. We can all slap hands. Congratulations, we did it, 10% positive. That's a remarkable year, let alone just 5.5 months, or 4.5 months, I guess. And so this is an impressive start to the year, to be sure. Energy is right there on pace with that market as a whole. Financial slightly better, but real estate, the sole year-to-date laggard. Sole year-to-date laggard. Meanwhile, who has been leading the front? Information technology and communication services are our current leaders, with utilities not too far behind. This is notable as we swing back and take a look at this graph. Same information, but now for the entire year of 2023, wherein energy was negative and utilities was negative, and it was information technology, communication services, and consumer discretionary that were strongly positive. In fact, enough so to effectively amount to all the positive activity for the S&P 500. If we go ahead and swing back and look again at this year's, a vastly different scenario. Number one, in the fact that we have no dramatic doubling and tripling of performance like we did last year, but we also have a more broadly participated in bullish rally in that we have almost every sector moving up. Real estate still lagging, consumer discretionary a little behind, but nonetheless, all told, we've got a lot of strength showing up in the marketplace. So this is great news as a whole. Let's go ahead and take a look and see how this rates and moves us going forward on a more zoomed in basis. Let's take a look now at a month by month instead of a yearly basis. And here's what we've got. This is month to date, as of the end of April through till present. How are we doing? Well, utilities has just week after week after week absolutely been dominating and moving upwards, 8% positive for the month of May so far. Remember, for the year, it was only up about 10%. No, a little less than 15%. So it's got about half of its positive move, folks, in the last month. A remarkable month of May so far for utilities. If we come over and look at information technology, it too has made up a dramatic amount of ground. Real communication services also doing pretty well. But believe it or not, even though real estate is negative substantially for the year, down about 3% still for the year, that comes after a 7% rally back in the month of May. So maybe it's a little bit it's time to say that real estate may be improving, certainly, as opposed to lagging continuously. Energy, the only negative sector for the month. Remember, that one was neck and neck with the S&P 500 in terms of its year-to-date performance. So we do have a little differentiation there. S&P 500 up about 5% for the month. Again, for the year at 10%. Dramatic month for May. Well done, month of May. Here was April. April was absolutely the opposite, where we saw utilities positive and not a single other notching positive for the calendar month of April. Everything down and real estate losing most of its ground right here in the month of April. Dramatic recovery this month so far from the real estate sector. If we come over and take a look at March, everything positive, consumer discretionary almost abstaining its vote, if you will. And then here was the month of February, where again, we had everything positive. So we've had a bit of a shift. Positive for February, positive for March. We start getting all negative here for April. Now we're getting back to that start of the year positive groove that we were in for a broadly participated in bullish rally. The only differentiation, the only disagreement coming from the energy sector. Next one we'll go ahead and jump over and take a look at is our custom-made heat maps. Let me go ahead and pull those up for us, folks. Here we are. All right, so we're going to glance through a couple of these. I don't think we're going to need that one. We'll go ahead and close it out. We're going to take a look at these and focus in on our specific sector, of course, but this is looking over the course of the last week. So since we met last time, how has price performance done over the last 5 days? Your brighter green colors are going to have a larger move. Your brighter red color is going to be a more negative move. And then those are plotted in here based on the size of the company, the industry, and the sector within the S&P 500 as a whole. The S&P moving up about 0.5% over the course of the last 5 days. But as we take a look and see where this comes from, by the way, folks, this data comes as of yesterday's close as well. And as we do and take a look, for example, at our most impressive moves, we had some 5% up. We had 5% up for the entire sector down here at communications equipment. Down in the bottom right, real estate coming back pretty strongly in its specialized REITs. And down here, office REITs as well, 4% positive. But our sector of focus today, communication services, if we go ahead and zoom in here, we can see the best performing over the course of the last 5 days was this one. WBD, not a company I'm familiar with by ticker symbol, but we could dive in and take a look at its chart. Positive, positive, positive. Media doing rather well at 3% up. Whereas Paramount off by 4%, 4.3% down during that same period. That's during the course of this last week worth of trading behavior. We back it up and say, well, what about a month's worth of time? Here's the same idea, but now a month's worth of time, not consumer discretionary. We'd like communication services. Communication services, now we get a little different view, and we see that Meta was down pretty substantially, 5% still off over the course of the last month. Google up 10%. And over here to the bottom right, Para up 18% over the course of the last month. We'll take a look at some of these charts in just a moment. But the key considerations as we think through the different parts of the communication services is we're divided up into a few different categories. Effectively, we have Meta and Google alone here in interactive media and services. Then we have entertainment, which is going to include your Netflix, your Disney, EA Sport, the entertainment arts company, as well as several other video game manufacturers, diversified telecom, media, and then down here to wireless communication services. So there is a lot going on within this. And as we do, we have a broad amount of information to dive into and understand. When we come through, here's the key considerations for communication services. Let's go ahead and take a look at this. Now understanding whether this is normal to have a positive swing 3% in this last month, or whether that seems abnormal. And to answer that question, we're going to rely on some seasonality analysis. Here we are looking at the seasonality for XLC, the ETF that tracks the communication services sector, and we will use that as our basis. You can see going back a decade in time or so, in this case, it only goes back to 2018 because there were some changes to communication services back then, but goes back to 2018. And during that time frame, we went from about $50 per share to now about $80 per share, certainly positive during the long run, but there was a broad swath there in 2022 with negative going on. As we look at the actual seasonality, this part down here at the bottom, taking into account the trend, there's not a dramatic amount of seasonality. If there was an area to be aware of, it's that the latter part of the year had some negative tilt. But again, knowing that this is less data than we've been used to, usually we're looking at about a decade going back to 2013. Instead, now we're only going back to 2018. Well, folks, this one's got a little bit less. Maybe we don't need to read into this too much, especially knowing that October and November have been a bit rough on the market, several of those past years, not necessarily a long-term indication of trends. So seasonality for communication services, perhaps the jury is still out on that particular area. With that, in awareness, let's go ahead and swing in and take a look at the actual seasonality. The actual screened information that we use to build up that sector heat map and dive through the data here. I use all of this straight from Fidelity's stock screener and download it. Then I just slice up the information. When I receive it in the downloaded format, it looks like this from a big table, and then I aggregate it over here into this maybe a little more usable format. We can see that communication services represents something like 10% of the overall S&P 500. And it does that 10% of overall weight in the index with only 21 stocks. A tenth of the stocks would be 50. So it's got dramatically larger companies than average as a result of this overall analysis. Its dividend is not too impressive across the sector as a whole, but you'll recall that when we looked at this last time, that's not necessarily true across the board, and we'll look at that in just a moment, but 0.8%, not too impressive in terms of a sector-wide dividend. Meanwhile, the price to earnings ratio, the PE ratio, the forward PE does have a very significant difference. Going from 30 down here to less than 20 tells us that there is expectations for growth of earnings in order to justify current pricing. And on a going forward basis, as we take a look, it's amongst the middle or maybe even lower PE ratios, telling us it's at least based on the forward estimates of earnings, a relative value compared to most sectors. There are just a couple that are lower, specifically energy, financials, and down here at the bottom, utilities have perhaps a little bit more of a claim to value on the basis of their lower PE ratios. But nonetheless, communication services does, after the growth, have a relatively low forward PE ratio. If we come over and take a look at the industry by industry look, again, these are the 5 industries that make up communication services. And as we see, there's a very big difference in this area. when we look at communication services, even if we compare diversified telecommunication services, which is Verizon and AT&T, and compare it against wireless telecommunications, which is T-Mobile, relatively similar businesses, at least in some aspects, the way that they operate is dramatically different. And we can see that right here. Verizon and AT&T, having been around a bit longer and maybe a little more established customer base, have here a 6.5% dividend payout between the two of them, whereas T-Mobile's paying in at 1.6%. These others have more than just those couple stocks in there, so I won't aggregate in the same way. But you can see that interactive media and services, this is where your Google and Meta show up, does have a minuscule but almost non-existent dividend. Same for the entertainment industry, whereas media pays a little better in terms of dividend rates over time. That will play into any of these figures like this one, which are a total return basis. And even factoring in the 6.5% dividend yield per year over the last 3 years, you would have averaged out a negative 6.5% by investing in the diversified telecommunication services. Whereas receiving that smaller dividend from T-Mobile would have netted you a 5% yearly increase instead. Better than both, though, getting almost no dividend and instead having invested in interactive media and services. History is not any promise of future performance, but nonetheless, it certainly was the right part of this sector to be invested in over here in the interactive media and services. And as we glance at the size of these, the market capitalization, it also is by far the largest piece of this puzzle. When we go ahead and scroll over to the side, we'll remind ourselves that yes, interactive media and services does have a few titans within its space. Google showing up, Meta, and also Match.com. We're going to dive deeper into these two right here on the basis of this. If we go ahead and come over and take a look, let's see if my sector screener is still active. It is. Excellent. What I did is came in here and added in our price performance over the last 13 weeks. It occurred to me that going through the 11 sectors that there is in the market and then repeating through them puts us at almost a quarterly update for each one of these sectors. And as a result, going forward, I intend to take a glance together with you at the top and bottom performing stocks within that sector during that intervening time. So in this case, it looks like it's not going to load up here for me, but you can see the worst performing from the sector was Match, MTCH. We'll take a look at that one. Top performers is actually Google as well as OMC. So we'll take a look at those from here through the duration of the session. So let's go ahead and slide all of this out of the way, make our way back to the S&P 500 chart. And now let's glance at a chart for the sector as a whole. Here's XLC. Some of the things to note. First off, we noted and talked at length that the S&P 500 is finding its way to an all-time high today. Please note for me that even though consumer communication services is the leader year to date as a sector, it is not the leader in the recovery. It found its way to a high, and so far that high is still ahead of us. Peak on the ETF is at $83.59. We are trading right now at 82 and change. As a result, we recognize this has not been the strongest part of the recovery. Rather, that metal goes over to the technology sector. But nonetheless, as we take a look, any way you slice it, what was a downtrend must be considered over. We have moved strongly positive. Again, the question becomes, as we move upwards in this rally, what is our trend? Are we going to use this very closely hugging, very steep upwards trend, or is that likely to break as soon as the market takes even a brief breather along the way? The first stock we're going to take a look at is GOOGL, Alphabet. And as we do, we take a look at its positive chart. It's a pretty impressive chart, to be sure. Though its highs are not the current value, we do recognize it did hit its high after the April 1st start of that month. Rather, it continued to march a little higher even through the month of April, only losing steam right before its earnings. This was a scary moment here on the Google chart, but it found its way higher on the back of an impressive earnings report. Market loved it at first. Half of the original move higher was given back, but then it seems to have found its footing. We have 5 out of 6 candles here in the first few days red. Then we're on a streak of 1, 2, 3, 4, 5, 6, 7, 8 green candles in a row now for Alphabet, meaning intraday movements have been positive for the company from the start of the trading session through to the end, whether or not those happen to be an increase in price from the previous day or not. Nonetheless, seems to have found a little bit of stability and moving higher along with the rest of the market. Google doing an admirable job of holding up the market, and over the course of the last 3 months, notching a plus 10% return. Absolutely phenomenal. Well done to Alphabet. It's had some interesting attempts to move higher on the basis of AI, but lots of those have been getting gummed up a little bit. So we'll see where that moves. It's had a few labor issues and things that it's dealing with, but nonetheless able to overcome to some degree. Next one is OMC, which maybe isn't as mainstream of a name. OMC, if we go ahead and click here on the stock ETF profile, you can see it's got a detailed description of what this company actually is. But in short, they're one of the major players in the marketing and public relations for companies. So they do a lot of outsourced marketing and public relations information for many different companies in the S&P 500, and they're large enough and good enough at it that they are themselves in the S&P 500. It's been around a long time, folks, since 1944. Impressive company. Omnicom, nonetheless, moving higher, and its chart is not quite so scary at any point, as was the Alphabet chart. Rather, it's been mostly moving along this steady upwards trend, fairly consistent. The most recent one pushing even higher. It's just 1 day away from its previous all-time high. And as it's looking positive today, maybe we'll see new notches in that particular belt very, very soon. But congratulations to Omnicom as it's moved higher. Finally, we'll take a look at the Match Group chart. Unfortunately, this one matches Match.com and other dating sites. And as we take a look, the Match Group, unfortunately, unable to prove much value to investors over the course of this period. Over the last couple months, it's down 10%. But looking back further from its peak, we are now down as much as 25%. Not an impressive spot. However, one little spark of hope showing up in that just yesterday and today, we are breaking above the downtrend line. Perhaps a turning of the tides, but nonetheless, we should be cautious here as the ongoing trends have been negative. All right, folks, I took 1 extra minute, got a little long-winded, it looks like, as I went through the material. Thank you for being with me. I do have several questions here as we look through it. I have a few things that we would like to address, so I will go ahead and answer them right out of the gate. A few of you typically ask how you can get access to some of these graphics, so let me run through them really quickly. The relative rotation graph, the one with the quadrants of those lines, comes from relativerotationgraphs.com. It's a free resource. You're welcome to go out there and grab it. It is not available on Fidelity's website. Number 2, our heat maps that I create for us are custom made by me. They are also not available on the website, but there is similar ones out there on the internet. Feel free to go ahead and search some out. This is called a heat map, and you'll find some good ones out there from FinViz and others. Again, third-party resources. Other questions. Let's go ahead and circle through these. AT, you said that you've noticed that some of the ETFs in the home building industry have beaten the QQQ over the last several years. Maybe we can talk about that in greater depth. The home building industry is a very interesting one. We did talk a little bit about it when we talked about consumer discretionary, as they form a piece, believe it or not, of that consumer discretionary. If we go ahead and back this out, we can see it. Here's consumer discretionary, and several of those home builders are actually right down here. DHI and LEN, these are some of the largest home builders in the world, and they are out here under household durables is the industry they sub-select themselves into. And certainly the ETFs, like the ones that you pointed out, do track them a little more closely. So we talked a little bit about that. The next time we come around to consumer discretionary, I'll be sure to hit that. But that was pretty recent, so likely it'll be a little while before we circle back to that specific topic. Thanks for bringing it to light. Yeah, the outperformance there has been amazing in these household performance. Household durables up 7% over the course of the last month, folks. Bill, let's see. On the sector rotation graph, would it be safe to say the S&P is all right in the center? Yes. Yes, Bill. I think I mentioned that right towards the end. The relative rotation is relative to each other, but since all of them as a whole make up the S&P 500, that axis right in the middle would be your S&P 500 performance. So you're looking relative to the S&P. Are we doing better or worse as we go through them? Dennis says that stockcharts.com has a lengthy description of RRG. I believe they are also one of the providers that has access to relative rotation graphs at stockcharts.com as well. So thanks, Dennis, for calling that one out. Christine, let's see. Does this rotation chart show year to date until May 13th or not? It does not. Let me pull that up again so I can show it. It says in the top corner that it's through May 13th. But that's the date that they place on it. If you go to their website and then hover over the most recent dot, it's actually labeled as May 14th, yesterday's date. So it does actually show up. Their date up here at the top is just incorrect. So be aware that that's a weakness in this particular chart, but it's not year to date. Each dot represents 1 day. Looking back, Christine, is the one that we're looking at. So it's going back a week and a half, 2 weeks or so, as opposed to a year to date. So much more granular view. Jeffrey, where do we find the leading individual stocks on a relative basis in a particular sector? A great question. So I have this pulled up. Let's see if our stock screener is going to cooperate. Let me refresh the page. It looks like, oh, maybe it timed out. Okay, let me sign back in really quickly and I will show you how I do that. Okay, that's logging in now with our test account. And here we are. So I'm on the stock screener already. I have saved this screen because I use it each and every week to prepare for this class. But all I did is add a whole bunch of different criteria in here. The key is once you have the criteria that you're interested in. So Jeffrey, if you're interested in a specific sector, you would add this sector, industry, and sub-industry, and then go ahead and narrow it down to whichever portion you would like. So in this case, why don't we go ahead and remove everything except for communication services. Now we're looking at only stocks into communication services. And since I already had added in several different measures of performance, now I just go ahead and click on whichever one we're interested in. In this case, I looked at our price performance over the last 13 weeks, 1 quarter, to see that Google and OMC are the top performers. And clicking it again to find the bottom performer, there is Match. So that's the easiest way to go ahead and take a look at that. Russell says, I'm Jacob Zoom in Ellis. Love it. Thanks, Russell. All right, let's see. Oh, James, I did make you a promise that I would find out when the next Excel class is. It will be in the month of June, but the specific date still has not been labeled. So I will expect to have a date for you next week. Sorry that I do not this week, even though I made a promise to that effect a week ago. So next week, come back one more time. I'll tell you, we'll go ahead and walk through the building of this particular spreadsheet. We'll do this one again next time we run that spreadsheet class, the Ready to Excel class, but the date for that will be sometime in June. I don't have a specific date yet. We're working on that June schedule presently. Let's see. Good. Oh, good. Yeah, I'm glad that, Angela, that helps to have the key. I realized that was a little hard to follow along without it. Okay. I think I hit all of the questions. If I missed one in my haste to go ahead and address these quickly, I apologize. Thanks so much for joining with me, folks. This has been Jake Talk Sectors, and today our focus was communication services. Going forward, we're likely to go ahead and dive through these in approximately the same order as we did last time through. I'll show you that so you can get a glimpse at what we're looking at. Here's what I had prepared. We went through communication services today, and just a couple weeks ago, we hit information technology and communication consumer discretionary. Longest time since we've talked about it is this utilities portion of the market. We will likely circle back to them so that we can get a relatively fresh update. I will adjust this based on what's happening and topical over the course of time. But given that utilities is also that top performing sector over the course of the month, you can bet that probably next week, we will be hitting utilities, freshening up that viewpoint, and then we'll continue through this list based on what's happening in the markets at that time. Until then, thank you so much, folks. We appreciate you joining with me. Thank you for being here. Until next time, this has been my pleasure, and thank you for your time. Take care.